Good morning, traders. Welcome to our Game Edge pre-market prep on Monday, July 14th, 2025. As always, here in our pre-market prep session, we'll cover our three pillars: sentiment, structure, and trend. We'll also go over our zero DTE trading plan for today, and then we'll have a few minutes at the end if anybody wants to go over single stocks or ask any questions in the chat. Be happy to answer those questions. So starting with our market trend model, as always here with at Game Edge, we look at our bolded CT. This is our intraday instantaneous cumulative tick. Obviously, this whole market trend model is based on the tick index. You can research that at your favorite investing website. But Friday, we did see some weakness in the overall tick under these shorter term moving averages. That gives us a little bit of caution for intraday as well as short term swings. Again, looking at the breadth indicator up here, new highs versus new lows. New highs were just barely outpacing new lows, but our filtered cumulative tick, which is plus 1,000, minus 1,000 block orders. These are larger institutional orders as well as larger market participants, was under the zero line and trending to the downside. All of this indicating that more stocks are being sold than bought on Friday, as we did see some overall weakness within the SPX and then our cumulative tick to the downside. Longer term look back model, obviously the colored ribbon, red above cyan, continues in a positive slope to the upside. So nothing really changed there. So what we'll look for today is to see if this bolded white cumulative tick continues to the downside, or does it flatten out early on in the session, start turning back up above these shorter term moving averages, indicating more stocks are being bought than sold, or do we start to see this continue to weaken to the downside and start coming around to touch this colored ribbon? We haven't seen that really for a few weeks, so we'll continue to watch this as we've reached all-time highs in SPX, so that we may be in a consolidation pullback period. So we'll continue to watch this via our market trend model. Moving on the SPXA, this is our cruise ships. We look at the SPX options market because it's the largest and most liquid, and we can get an overall sense of sentiment and structure via this. So our SPXA, I've just highlighted this expiry. Obviously, this is the monthly expiry OPEX coming into Friday. So just this expiry is highlighted, call dominated above and below spot price. You can see that 6,300 level to the upside is a prime target. That's our PGEX level indicated by the green dot. You see 6250 is an important level also, and then 6200 to the downside. So any of those levels, obviously, we'll be watching for pullbacks, opportunities to get involved in the overall market. If we get below 6200, then obviously we'll be looking for 6150. That's the bottom of a larger transition area on the SPXA. And also PGEX. Again, these contracts do not turn over intraday or weekly, just these monthly expiries. So the influence intraday is a lot less than the SPXP. That's why we separate these out and give us our 30,000 foot view via the SPXA and the institutional positioning. So quick takeaway, obviously call dominated, structure still looks good heading into the overall OPEX week of expiry. Moving on the SPXP, these are our speedboats. Obviously, these contracts turn over much more rapidly, as indicated by the purple tiles over here. Zero DT as well as multiple weekly expiries. Call dominated heading into today. Structure still looks very robust and bullish on any pullback. So any pullback to key levels to the downside, we'd be looking to get involved in the overall market. That would be also if our market trend model is indicating that market participants are still in the accumulation mode and we're not seeing significant weakness. To the upside, 6,300, that's most likely going to be the cap that we're watching. PGEX there. We do have a lot of out of the money call speculation above that 6,300, but as of now, not really anticipating we get through that, at least via today, unless we see our intraday volume command targeting those upside out of the money strikes. So we'll look at the zero DT here in a little bit and kind of go over why the structure is really not conducive of moving above 6,300. Moving on to the SPX PGEX ratio. This is kind of our cautionary yellow flag that we've continued to talk about the past few days. We continue to see the GEX ratio drop to the downside while SPXP continues to consolidate or slightly move up. So the GEX ratio is basically a improved put call ratio that we've developed here at Game Edge, where we add a time component, which is gamma. So this is obviously indicating that short dated call gamma is continuing to drop. That would be short dated call speculation. Continues to drop as the overall SPXP or XPX continues to trend sideways or to the upside. So we'd like to see this turn back to the upside, indicating short-dated call speculations going back into the overall complex. But again, this divergence will play out one of two ways. We'll continue to see the SPXP GEX ratio drop, indicating that call speculation is leaving the overall complex, and then finally we'll see the price most likely follow that, or we'll see the price continue sideways. The SPX GEX ratio will continue to fall and then start to consolidate and then move back to the upside, indicating that the call speculators are coming back in. So we'll obviously continue to watch this. It's not really a huge bearish development because we're still above 1. That's that kind of theoretical balance of puts to calls that we like to stay above, indicating that call speculators are maintaining control, but just a divergence heading into this week that we'll continue to watch. SPXP delta balance, this is just separating the SPX option structure for above and below the overall spot price. Blue is our delta balance line. We do see it start to drop slightly into this week. Basically Monday here we see a little bit of weakness, but not a significant amount. Again, right hand plane is your green dotted line. This is your out of money call speculation, so that continues to drop below 0, but our in the money calls are being maintained below the overall spot price. So in the money call holders are holding steady, out of the money call speculation waning. That's kind of why leaning to the thought process that most likely the price appreciation above 6,300 will be difficult, again, unless we see our intraday volume analysis indicating that out of the money call speculators are coming in hot and heavy above spot price, but at the moment not really indicating that. And then our projected on out in time, we do see some weakness heading into Wednesday. We do have obviously Vixpiration, CPI, PPI, and then OPEX this week. But then we do see a recovery towards the end of the week. So we'll watch this, possibly early weakness in the middle of the week, and then a recovery towards the end of the week is a possible scenario for now. So we'll continue to watch that. SPXP 0DTE gets you oriented pretty quickly here. The white is our GEX transition, as well as our DEX transition confluence today. So we've only had one box there. We're going to open most likely within this overall transition. So again, this is a choppiness area where we like to wait for our overall trades to become a little bit more risk reward defined. So that would be above the transition area. Again, drunken sailor range outlined here. These are low exposure areas where you will be at the mercy of the intraday volume analysis. So again, this could be extremely choppy within the overall transition and drunken sailor range. So a couple theses for today. Trades would be above transition, 62.65 along towards the top of drunken sailor range, 62.90, again at the mercy of the volume intraday analysis. So we need to see both those centroids pointing to the upside, indicating out of the money call speculation. And then that cap at 6,300 would be most likely. That'd be the profit taking area. If we reach 6,300 and get a few tests without the overall intraday volume being able to push us higher, this may be an opportunity to short for a move back down towards the top of the transition within the overall drunken sailor range. On the bearish side, we would be looking for an exit about below the transition level, the GEX and DEX transition level, but then we do have the bottom of drunken sailor range, so that would be a very short trade there, most likely just maybe 10 points there. And then if we do lose the bottom of the drunken sailor range as well as the in-GEX level, we'd enter a little bit more negative gamma area and then see in the money calls below us, but we have that gradient and shading down there at 6,200, so that'd be most likely the first target that we'd be looking for. So we'd be short versus the bottom of drunken sailor range as well as the 62.35 level, and then a first target area would be down around 6,200. Obviously we'd have to have a significant move down in the intraday volume analysis. Both those centroids, call and put centroids, would need to be pointing down, and most likely our market trend model would be in a risk off overall look to where that bolded CT would be under our short-term moving averages. So anyway, call dominated, so that's supportive starting the day. So any pullback, most likely we'll look to get involved on the upside, again, unless we see a significant change in sentiment and structure. So we'll watch that throughout the day. Net stack command for spot price to where we most likely opened this morning. This just indicating that we're pretty balanced. As you can see, versus in the money calls and in the money puts. So this is what we call kind of a locked horn look. Again, price appreciation to the upside will be difficult. 6,300, those in the money puts above us. Moving above that, like I said, will most likely be difficult without a significant volume move to the upside. And then on the charm side, we have these out of the money calls. These will continue to grow and provide a headwind at 6,300. And then obviously 6,200 significantly down there. Those out of the money puts would be supportive, but that's a long way down. Key sensitivity gamma levels, 6,235. Again, that's that index and bottom of transition as well as bottom of DS. So again, if we get below those levels, again, we could increase the speed to the downside, and then to the upside, 6,300. If we did get above 6,300, we'd start kicking in that gamma there, and that would most likely increase the speed to the upside if we have the volume to push us to the upside. So heading in today, overall plan, as I've just outlined, we'll go back to the 0 DTE. There's our pre-market. We're looking at 62.39, 62.40. So again, back to our 0 DTE trading plans. We're going to open most likely at the bottom of transition area and in GEX. So if we get below in GEX, we most likely could take a short this morning for a move down towards first the quarter level and then down towards 6,200. If we stay within transition DS, it's just going to be very choppy at the open, and then we'll risk reward defined. We'd wait to get above transition for a move to the top of DS. So hope that helps everybody. If anybody wants to go over any single stocks, we can cover those this morning. We'll most likely be doing a post on X of those single stocks that are around the key gamma delta levels, but that's kind of our trading plan for today. Again, most likely range bound and locked horn via that net stack command and sensitivity areas that we're looking at, again, unless we see a significant change in the overall intraday volume analysis. So this may provide us a good range unless we start getting below the bottom of DS and the bottom of transition, which we look for a move down towards 6,200. So, all right, thanks everybody. Thanks for joining us. Make sure you check us out on X and YouTube. Hit that like and subscribe button. You'll be notified when we go live. And then we'll have intraday commentary via X and updating on our market trend model, as well as key areas in structure and sentiment on the SPX. So, all right, everybody, have a great day. Thanks.